Hey, it's Adam Anderson with WealthGuard Advisors. Thanks for tuning in today.
Hello, I'm Blake Anderson, Certified Financial Planner. Thanks so much for listening.
Yes, I just want to remind you that past performance is no guarantee of future results, and you should read the disclosures at the end of this video carefully. We will be talking about stocks today that may or may not be in our portfolio, so just be aware of that. We want to be we want full disclosure on what we're doing here. But Blake, I wanted to talk about basically the overall market real quick, and also some of the things that are coming up.
Yeah, so this is the S&P 500. If you look here, we had that scare last week with this new whole tariff situation over Greenland. And we said at the time that it likely wouldn't amount to much. And we see that that's true. We had pretty much an immediate rebound, and we're back up to where we were before that. Obviously, we keep an eye on those sorts of things, but more often than not, they tend to be, flash in the pan. Not a lot of lasting substance on issues like that, especially during this Trump administration. We've seen that cycle a lot. Looking forward, the next, scare we're anticipating is a potential government shutdown here at the end of the week. And if you remember, back in October, we had a pretty significant shutdown. It was 43 days, I believe. And if you look at the market over that time frame, it was up. We didn't see any significant impact. And if you go back to the prior one in 2018, the market actually did pretty well over that time frame. And then coming out of it for the next couple months, it was a strong market coming out of the government shutdown as well. So I'm not anticipating this upcoming potential government shutdown to be a problematic situation for the overall markets.
Right. The probability of a shutdown, they're ranking it at 90%. Obviously, the Democrats really want to dig in their heels, and I think that's their way of protesting is by shutting down the government and not letting to pass the bills to open it up to pay for our programs. So, yeah, like Blake said, it may be at least past precedence has been that it has not shaken the market. The other thing that may shake the market this week is the Federal Reserve meeting that's on Wednesday. We'll see what they don't expect any rate cuts. That's already kind of not in the cards. But the commentary from Jerome Powell as to future rate cuts may actually have some effect on the market. So we'll be watching carefully to see what kind of indications of future rate cuts or stability or rate hikes are in the future. So we'll be watching that. I wanted to talk about we do have earnings, and some of our big what we call Mag 7 companies are on the slot to be put out their earnings this coming week, and that'll be from Microsoft. We'll hear from Apple, Meta, and Tesla. Will be giving us some idea of what's out there and how the market will react to that. So we'll be watching that too, and those can move the market. One of the things that I wanted to talk about is just about overall market indexes. So we've seen a resurgence in the global index. So international stocks have really been outperformed. They outperformed last year, and also small and mid-sized companies are starting to outperform. So I really want to talk about a little bit about these indexes. I have some interesting information that I'd like to share along these lines. So I wanted to share this periodic table chart provided by American Century Investments. So if you want to get all the disclosures on this, you could find it at American Century Investments, not FDI's. Sure, may lose value, no bank guarantees. So that's where you can find this. But that basically goes over the last 10 years, the top performing investments by category. And we're looking at small companies, large companies, mid-sized companies, commodities, emerging markets. Those are the small international companies like Vietnam and stuff like that. A diversified portfolio, real estate, large company stocks, bonds, and foreign stocks. So I can kind of give you a top to bottom, best performing to worst performing for the last 10 years. And what I really wanted to point out here is it's been my experience looking at the in these different categories is that mid cap, like right now we're talking about small mid caps are really starting to shine. But if I had one category to pick out of all these for a long-term investment, it would be that mid-cap growth category. As you could see here on this chart here, we got the mid-caps is right here in the top over the 10-year average. It is the third best performing, and that's up 11.1% on average. It does have a little bit higher standard deviation, and that's deviating from the average. So you'll see a higher highs and higher lows, but the averages, you'll find that that mid cap area is been pretty consistent if you start looking at the averages. So I thought that was interesting. All right, this 10-year, it's actually been large cap stocks, really dominated by those Mag 7s, the Nvidias, Microsofts, Apples, etc.
But since they've grown so much, it's also good to incorporate some of these other asset classes that might have been overlooked over time. And I think a sector that's been overlooked is the mid-cap growth stocks that do perform well, but just because they haven't performed quite as well as the larger cap comparables, they might have become undervalued in your portfolio.
Yeah, diversification is always the key to high quality long-term performance. Since we started talking about the small cap, mid cap, and internationals getting that exposure into the portfolios, it really started looking at these individual sectors. So I want to take another chart and take a look at a similar periodic chart. All right, so I found another periodic table chart from Novel Investors. We'd like to give them some credit and a shout out for the good work they're doing there. Where you can find them should be on this page at the top there, Novel Investors. But this is a 15-year chart and it really breaks down different industries. So in this case, we're going to look at the long-term average for the last 15 years. Your top performer is information technologies. I like this one because it highlights the each year's performance on this. So your information technologies, of course, this would be your AI and that type of things would be in this category. That is your best performer over the last 15 years. But I was really shocked at the second top performer over the last 15 years. And this is consumer discretionary. So I wanted to define what discretionary is versus there is also consumer staples. Consumer staples are things you have to have. Consumer discretionaries is things you want to have. So I thought this was interesting. But in this, Netflix is one of these, Amazon is in here, Tesla is in this index, and Netflix is like one of the best performing stocks over the last 20 years. So maybe it shouldn't be so surprising, but it's just interesting to me that the want to haves beat out the need to haves as far as performance. So I thought I'd share that with you as just an interesting sideline about industry performance.
Yeah, I'd like to highlight just how big of an impact Amazon and Tesla have on this consumer discretionary index sector. Amazon is over 22% of the consumer discretionary portfolio, and then Tesla is another 20%. To compare, the third largest component of the consumer discretionary sector is Home Depot at just over 5%. So maybe there is a little bit of extra weighting there. 2/5 of the total consumer discretionary sector is those two companies. So just something to keep in mind, but it has worked well over the last 15 years.
And if you are a contrary investor, the worst performing index is energy, which we're actually seeing pretty good, right as the last few weeks, months has been actually performing pretty well. So just for a little sideline there. But we do believe in diversification to have a broad exposure, but then we focus on things that we feel that could outperform the market. And if you'd like to hear more about our philosophy, we'd be happy to talk to you. Just look us up on our website. Blake, you'd like to close us down?
Yeah, just a reminder, WealthGuard Advisors, we're a registered investment advisor and have a fiduciary responsibility to our clients. We're required to put our clients' best interests first. We specialize in personalized asset management and financial planning designed around your unique goals. We work on a straightforward fee-only basis, no setup fees, no enter or exit fees, just transparent pricing for the services we provide. So if you're interested in what we talked about today and would like to learn more, we're happy to do a free consultation to see if we could be a good fit for your needs. Thanks so much for listening, and we'll see you next time.
Thank you. Have a good day.